market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Traders are avoiding risk headed into the weekend. Brent touching $100 a barrel. Some big tech, big U.S. tech stocks actually tumbled yesterday. Now, to cap the week, we have new tariffs from the White House. So I'm now joined by Kamakshya Trivedi, Chief FX and Emerging Market Strategist at Goldman Sachs, Brent Murray, who leads our global trade coverage, and Shona, Ghosh, Bloomberg's tech editor. So there's a lot going on. I'm glad that we can bring you all together to try and figure some of them out. Kamakshya, overall, I mean, do you worry more about AI, trade, or the Middle East?
I'd say different horizons. So I think on the trade side, this is a replacement of tariffs that were about to expire. There's a similar range, so I don't think it's going to be a first-order market mover. I think in the short term, I think the Middle East, the energy price moves, I think they are important. The headlines there are getting worse. I think markets have been reluctant to price it, but I think are coming along to the side that I think you need to start taking this a bit more seriously now. But I think the bigger picture, the main risk here that I think is really going to affect market views one way or the other in the long term is what is going on the tech sector and kind of the AI, because I think that AI investment spend has been a big driver of a lot of global market themes. Yeah,
and Shona, overall, I mean, what did we learn this week? There's a lot of spend out there. There's a lot of bonds that will be issued or debt that will be issued to make up for it. There's nothing concerning, but again, it's one of those weird weeks where markets are also taking pause.
For sure. So we obviously learnt that Tesla, Google this week, their capital expenditure is just going up and up and up. That's causing some concerns. For Google, you would expect it, but kind of an alarming sign was this is the first quarter, possibly since its IPO, that we've seen a negative cash flow for the company. Tesla, similarly, first negative cash flow in a couple of years because the AI expenditure is so big. Not seeing necessarily a ton of returns on that expenditure just yet, and sort of no signs in the foreseeable that might come. We had some early signals that maybe sort of AI earnings are kind of catching up to that expenditure, but really the sheer volume needed to be spent means we're not going to see a return for a while, and that's causing some jitters.
Shona, I mean, we also spent a lot of time actually, thinking about this. I mean, it's not hacking, but basically the fact that some of these models are dangerous because they can also go into other models without knowing. Do we know any more about how we can fix it and actually what exactly happened with Hugging Face?
A little bit. So, as ever, there's a degree of human error here, which is simply not understanding the guardrails that need to be around such models. In this case, this was OpenAI testing a couple of its advanced models, putting it in a sandbox, which is a protected environment. But the model was quite clever. It was given a test, and it said, I will solve this test in any way I can. And so there clearly wasn't enough of an instruction there, perhaps intentionally, to sort of stop the model from trying to do anything to break out of the sandbox. And it just goes to show that sometimes these models can be extremely determined if you don't sort of cleverly think around how they might try and break out of a sandbox or protected environment. So it's a little scary. I think it's not the end of the world. I think it just goes to show these models need really careful thought before they are released into the wild.
And Brendan, I mean, we thought tariffs was like a risk of the past, didn't we? I mean, we kind of started the week with a bit of skirmishes between the U.S. and Canada, but, President Trump is rebuilding these tariffs.
Yeah, exactly. As the U.S. Trade Representative Jamieson Greer said to Congress this week, the authorities are changing, but the overall strategy isn't. And at the core of the strategy are tariffs. And they're basically going down two tracks now. One of them is this slower procedural path with the 301 investigations like the one we saw take effect today into forced labor. There's another one coming on excess capacity, could be August or September, with additional tariffs on a lot of major U.S. trading partners. And there's this other path that we saw emerge this week, as you mentioned, with Canada, this new authority that hasn't been used in almost a century, this 338 authority that the president threatened against Canada with 50% tariffs that'll take effect in 30 days. So we have this sort of predictable path with the 301s, and then we have this new untested authority that the president may be using against Canada and perhaps other countries to sort of shake things up, to drive negotiations. So a lot of the uncertainty is in the past, but we have some new questions about how much authority the president has to sort of wield tariffs on trading partners as he sees fits.
So, Kamakshya, where does that sit? I mean, is that I imagine it's inflation in the short term, right? When we're inflation, we maybe worry about it a little bit less than a couple of months ago. Or do you put it in the kind of geopolitics?
No, I think there is an inflation impact, but again, I go back to the fact that at least the level of tariffs is replacing the tariff level that was already there, that was due to expire at the end of this month. So I think from an additional inflationary impulse, it's probably not going to be the game changer unless you go down these kind of 50% tariffs, the Section 338 authority, which of course will be questioned and challenged. So I'm less worried about the inflationary impulse from tariffs per se. I'm much more worried about the inflationary impulse that is coming out of the energy complex right now. Right. And that's the one that I think we need to watch.
But that's oil, or is it also actually the capex spending that we're seeing in AI?
Both. I mean, I think the energy and oil is the kind of short-term swing factor that kind of drives this up and down. But I feel like you've heard from the FOMC that there's kind of limited tolerance for overshoots, no matter what the source is. But again, the longer-term, bigger factor here is the AI capex spend, and shifting views there, I think, are going to be a key driver of the cross-market response.
Brendan, I mean, do we know whether we've heard from, I think, the Singapore foreign minister who's pushing back, but do we know the biggest danger is if some of these countries then retaliate? Right?
Yeah, exactly. We've heard from a number of countries. They're not happy with it, but most of them are sort of taking it on the chin. The European Union said it falls within the deal that was struck between Brussels and Washington. But it almost went unnoticed yesterday that the U.S. trade representative went after the European Union for the fine that they levied against Google and for this European investment bank loan to Airbus. So these long-running issues. The overregulation, according to the U.S., of American big tech companies, and the long-running Airbus-Boeing dispute over subsidies have kind of come to the fore there to perhaps shake up the transatlantic relationship.
And Shona, on AI, I mean, it is pretty incredible when you look at these figures. You know, Alphabet's future spending commitments are basically $111 billion. I mean, just the sheer size, and you wonder what kind of impact this has on inflation, because I don't know if anything happens with interest rates, they'll stop that. But there's also a couple of other stories like Microsoft replacing, OpenAI images. Like, are we just also going to, is our interface with AI going to change quite quickly?
I think it will, and I think a big story this week has obviously been the rise of the Chinese models. Yeah. This is periodically a story every few months because a new model will come out and everyone gets very alarmed. And I think what we're seeing is that China is certainly willing to fund the development and the powering of these models and then issue them out into the world and issue them at very low cost. And increasingly, businesses are beginning to notice. We're hearing perhaps not so much of the big players, but certainly smaller startups who, have limited runway are saying, I can't afford to spend all my tokens on Claude, which is expensive, from Anthropic. I'll switch to DeepSeek or one of the other cheap open-weight Chinese models. So that's the other factor that is, going to have an impact on the spend, which is, some of these companies are relying on making their returns from being able to charge customers for their models, but the Chinese competition may undercut them. Yeah, something that we actually really need to keep a very close eye on. Shona, Ghosh and Brendan Murray, thank you both for joining us. Kamakshya is staying with us because oil is holding around $100 a barrel after President Trump threatened to escalate strikes on Iran and hold the country responsible for any attacks in the Red Sea by Houthi militant in Yemen. Now, for more, let's bring Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Onur, so is there any prospect of de-escalation at this point?
Well, there are certainly efforts underway to de-escalate. According to the New York Times, there was a truce proposal, a new one, that was relayed to Iranians by the Iraqi Prime Minister on Thursday, but that was flatly rejected. We are also seeing, according to headlines that are just moving on the terminal now, Iran's foreign minister Arakchi is meeting with his counterparts from China and Russia later today. That's also ostensibly about the efforts underway. But the differences between the two sides, especially over the issue of Hormuz and who controls it and how, remains really wide for there to be an imminent breakthrough, just judging by the narrative coming out of D.C. and Tehran so far, Francine.
Honor, thanks so much. Honor Anther, Bloomberg's managing editor for the Middle East and North Africa. Let's get back to Kamakshya Trivedi, Chief FX and Emerging Market Strategist at Goldman Sachs. Kamakshya, I mean, when you look, and we talked a little bit about the inflation forecast and the fact that actually this war seems to be going nowhere and we don't really see de-escalation points. So does it change your outlook for both dollar, oil and inflation?
Yeah, I mean, I think what is interesting is that in this particular re-escalation, the dollar impact was actually somewhat more muted, at the start of the re-escalation, right? And even though the headlines in some sense seem to be worse, you have now two straits blocked instead of one. You're starting from a point of much lower inventories in the global energy market than you did before. But I think part of the reason why the response has been more muted is I think, people are expecting some sort of de-escalation, the question you were just asking, and also partly the impact from the terms of trade of the first part of the war hasn't completely dissipated. So I think that there has been a reluctance to really commit to this energy price increase in a way in dollar, in cross currencies, in inflation markets. But I think it is changing. I think, you're beginning to see now the levels of increases in gas prices in Europe, in oil prices, that I think the dollar is beginning to, acquire some degree of a front-footed nature. It's beginning to appreciate a bit. You're beginning to see those terms of trade distinctions start to play out versus the oil exporters and oil importers.
And Kamakshya, of course, yesterday we had the ECB and here's President Lagarde on the price of oil.
The energy shock continues to feed into higher prices. It is becoming more expensive for firms to source inputs, and they therefore expect to put up their selling prices. While developments in underlying inflation have remained contained, the full effect of the energy shock have yet to play out.
Kamakshya, I wanted to ask you about emerging markets, but also about the UK. This is a small open economy that's extremely impacted by the price of oil, with energy impact, with a new prime minister.
Yeah, absolutely. And I think the surprising thing for a lot of people and for us as well is at the start of this month, the pound was one of the best performing currencies. And actually, that's in the short term. But actually, if you look at it in the medium term, there's been a lot of downbeat sentiment around UK assets. That's not been true of the currency. The currency is one of the most overvalued currencies on our metrics across the G10. So we expect some degree of, pound bearishness or some depreciation creeping in as you unwind some of that optimism, partly on the back of some of these energy price increases as well.
But why are pound traders so optimistic? What are you expecting from the Prime Minister?
I mean, I think that what has happened here is, you had some unwind of negative positioning. You had quite a lot of M&A inflow. I think carry has been a big theme, both in emerging markets, but also in G10. And, UK and the pound in particular offers one of the highest carry in G10. And so I think that you had a number of factors come together. And ultimately, it's a pro-cyclical currency. It does well when equity markets are rallying. I think all of that has helped the pound. But we think it's gone a little bit too far. And, so far, it's early days with the new prime minister. We'll see. But I think that, if you are bullish on the prospects of the UK with the new Prime Minister, there are other better assets to express that, we think, whether it's mid-cap stocks or, bonds rather than the currency itself right here, right now.
I mean, the million-dollar question, of course, what happens with fiscal discipline? And again, we're day 5, so it's a little bit unfair to put him and the Chancellor on the spot. But are you hearing the right noise? I mean, can they basically please the bond markets, but also make this a fairer society where citizens feel like they are not left out?
It's a really tough question. I don't envy the shoes that he's in and those trade-offs that they have to make. But I think, again, it goes back to the discussion we were just having, Francine, which is that I think they can try and do a little bit to help people. But ultimately, what bond markets will care about is if you're going to be a kind of cost of living prime minister, what happens if the energy price shock is a much bigger one? Like, how do you deal with that? And I think that's what bond markets are going to care about. Like, can you maintain fiscal discipline if you really get that? If we're lucky and the global supply shocks abate and the inflation picture is much more quiescent, I think bond markets will be okay. But I think, we haven't been very lucky with global supply shocks in the last few years.
And that is very true, especially for emerging markets. Now, they've overall had a pretty good run. Yeah. But actually, the last 3 months have been extremely difficult for some of them. So what do you see, for example, in Japan, but also some of Southeast Asia?
Yeah, I think that, again, a lot of these are big energy importers. And I think, again, that energy shock is not going to help. But I think the other theme, like I said, is playing out across a lot of these countries, both G10, EM, is carry and the ex-ante real yield. Places that have got a decent real yield cushion, they're holding on okay, even in the face of these supply shocks, even in the face of some of the volatility in equity markets. Japan does not have a big, yield buffer. It's one of the low-yielding currencies, which is why I think, we are more cautious there. And that's true of a lot of the Southeast Asian low-yielding economies as well, like Thailand, and the Thai baht is a good example. We think it should be on the short side, on the funding side of global carry trades.
Kamakshya, I feel like we've spent 15 minutes looking at the forces at play, some of the risks out there. At the end of the day, what does it mean? What do you think is the best value play in the markets right now?
Look, I think that in the near term, a lot depends on what's going to happen with the energy side of things, right? I think if the energy side of things comes off, as we've seen a few episodes of this, I think some of the hikes that are now priced into the curve are going to be tough to sustain. That's probably the clearest, value play, if you like. I think more medium term, I go back to, I think, shifting views around AI and that spend, the value proposition there, I think is going to be key to driving sort of markets for the second half of the year.
Kamakshya, thank you so much. Kamakshya Trivedi, there, Chief FX and Emerging Market Strategist at Goldman Sachs. Now, coming up, global trade trouble. We'll discuss the impact of President Trump's new tariffs. That's coming up next, and this is Bloomberg.
Thursday. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts Thursday at 12:30 p.m. only on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, President Trump is rebuilding his tariff wall with new levies on 60 economies. Just after 5 a.m. London time this morning, U.S. tariffs on between 10 to 12% kicked in on most of America's major trading partners. Now, it does follow an investigation into the alleged failure of those economies to prevent forced labor in their supply chains. Now, for more, let's bring in Rebecca Harding, Chief Executive at the Center for Economic Security. Rebecca, thank you so much for joining us. If you look at exactly what happens, what is the reason for this to be back on the agenda? We knew that President Trump was never going to let it go. Did you expect it to come back so soon?
So it was inevitably going to happen today because the previous sort of stay of execution, if you like, on the 10% tariffs expired today. So it was something that was definitely going to happen today. That was obvious. The real concern here is that this is using parts of the law. It's been investigations that have been going on for a long time, but it's using parts of US trade and tariff laws that are very technical. So the real challenge here for everybody is that this could get worse. It's certainly not gone away. America is still using tariff policy as its major instrument to coerce and influence the global economy. And so everybody has to start getting used to managing through this type of uncertainty, because there will be disputes, there will be arguments, there will be conflict. And this is something that the Americans are preparing for.
But are these new tariffs purely a replacement of the earlier duties that were struck down?
So they actually cover a large amount of international trade. So they cover around 99% of US imports. So it's covering a huge amount, but they're doing something different. So they're asking for every single trading bloc, every single nation to look at their supply chain rules and their regulations and their enforcement regulations. So it's very, very technical, asking every single nation to have a look and see where they could actually tighten their law in order to accommodate this rule that in no supply chain must there be exposure to enforced labour. Now, there's already corporate law and corporate regulations and reporting standards around all of this. So the UK, for example, relies on all of those sorts of things. So it's almost voluntarism and doesn't have trade law as such that says we can't import stuff that's exposed to enforced labour. So the European Union does. So this is where the grey areas are going to be, because the UK government will quite rightly say, well, this is all catered for by corporate law.
I mean, a lot of countries, of course, India to Norway, have pushed back against the allegations. This also has huge implications for the cost of living, as inflation could go up. I find it quite risky 4 months to the midterm. I mean, when you look at, the focus, which is for the Democrats in the U.S., the cost of living crisis, would this not automatically make it worse?
I think that, the jury is out on the effect that this is having on the American economy at the moment. But the price influences over and the pressures on inflation at the moment for the US economy are very significant. US policy is not, the US trade policy, the administration's trade policy at the moment is not loved by the American public. And so the problem as we get closer to the midterms is always going to be the fact that President Trump is not seen to have reduced prices in the way that he said he was going to. Now, he's saying this is all a price worth paying, and he doesn't worry necessarily about the impact on the economy. He believes that the whole point around making America great again and America first in everything that he is doing at the moment is actually going to be sufficient to carry him through those midterm elections.
Is there, and again, also complicating things is that currently we understand there are refunds at the U.S. Customs and Border Protection from the previous, of course, trade agreements that were then struck down. Rebecca, what is your feeling? Will other countries be fed up with this and retaliate? Because if there's one thing that I remember from 2025 is that we're all quite surprised that actually the rest of the world took it on their chin and moved on.
I think this is slightly different because it is accusing countries of so the 301 tariffs and the 301 reviews are accusing other countries of being unfair, and the European Union will kick back and say, well, we're not being unfair, and we've stood by the terms of the agreement. Now, the European Union, for example, does have a huge anti-coercion instrument that it can introduce in return for these types of tariffs, and it's never actually triggered that button, but it could. So there are mechanisms by which this would happen. So, for example, the pharmaceutical tariffs, which have come in as well on generic tariffs. Now, on generic pharmaceuticals, that's going to hit in 2 years' time. But it's going to affect the way in which countries think about investing in the United States. And it will particularly severely hit India because India produces so much of American generic pharmaceuticals. So there are going to be points where I think the rest of the world turns around and goes, actually, this isn't fair anymore on us. And there is a risk that other countries will retaliate. And the one country that could, of course, is China.
Yeah, Rebecca, thank you so much for all of your insight. Rebecca Harding, the Chief Executive of the Center for Economic Security. Coming up, how much of a threat does AI pose to our private communication? We'll discuss all of this with Meredith Whittaker from the Signal Foundation. That's coming up next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump rebuilds his tariff wall that was struck down by the U.S. Supreme Court with new levies on 60 economies, including most major trading partners. Traders also fear that the AI rally may have gone too far, with the Magnificent Seven shedding nearly $800 billion in market value in one session. And Brent touches $100 a barrel, with President Trump saying he's considering a massive attack on Iran to encourage negotiations. negotiations. Now, AI security has come back into, of course, global focus this week after Bloomberg learned that OpenAI's advanced models attacked the startup Hugging Face in just a matter of hours. Well, my next guest is warning that the rise of AI, alongside further tech legislation, risks, of course, undermining the principles of private communication. Well, Meredith Whittaker is the president of the Signal Foundation. That's a nonprofit organization which also owns Signal Messenger. The organization says its app has been downloaded or installed hundreds of millions of times, including in countries like Ukraine, following the Russian invasion. Meredith, great to speak to you today. I mean, there's a number of questions, of course, about, what we should worry about most, but can you break down the potential security risks posed by AI agents?
Well, for Signal, there's a very concrete security risk, which is that we're seeing these agents integrated into our core infrastructures, like our operating systems, iOS, Android. We see these updates, agentic capabilities. Great. It can live my life for me. It can book my travel. But, of course, in order to live my life, it needs to know about me. It needs to have access to data. So what we're seeing is agents that, under the guise of being our magic genie butler helpers, are actually demanding huge amounts of access and huge permissions to do whatever they want with that data. My credit card information, my calendar information, my contact list, to book a dinner for my friends, all of that then being sent to external servers, processed in ways that may not be secure. And Signal really sees this as a threat on our ability and every software developer's ability to really ensure privacy within these environments. So we see potential in these technologies, of course, as does everyone, but we're also seeing them architected and pushed into the markets in ways that we consider extremely reckless.
Meredith, I mean, just to be clear, this would be because you could have someone hacking into the system and getting information, but it could also be a government, tapping in and saying, actually, I want that information because I need to surveil, a certain type of person or a group of individuals.
Absolutely, all of the above. So there are 3 large commercial operating systems. We all know them: iOS, Android, Windows. And we all use one or another one of those. And so an ability to tap into one of those circumvents Signal's encryption and provides a kind of honeypot, a master switch to be able to get that kind of information. And again, what we are calling for is much more constrained deployments of these systems, the ability for developers like Signal to say, no, you can't touch Signal data. Signal data is mission critical. These are communications between Ukraine's military commanders. These are human rights defenders in places where they could be harmed if their communications were leaked. These are journalists who are protecting their sources, and giving access there is something that is extremely perilous to these people and undermines Signal's mission and our ability to continue with our mission with integrity.
Why do a lot of people not think about it? If you look at the big developers, is it just commercial, or is it because they think they can think about it afterwards?
Well, I think there is a commercial imperative. We saw, the CapEx versus revenue is a big topic on your show and everywhere in AI, and there's a real need to find a consumer market fit and prove that revenue can turn to profit and actually reap the gains of these technologies. So I think the incentive for cutting corners, for reckless deployments, for saying, we'll solve that later, is pretty significant. But I also think there's a tension here that's more fundamental. In order for an AI agent to be able to do everything for us on our behalf, it needs to have data. And so the question then is how much data, where does it get access to this data, and what kind of guardrails can we put on that so we maintain the core security of our infrastructures, which power our governments, our financial institutions, our militaries, and our intimate and personal lives.
Honestly, it's quite difficult actually to speak up on that, because the European Commission and certain MPs have tried, and then there's an idea in the investment community that Europe over-regulates, and that's bad for business.
Yeah, well, I think that is a long-held trope. Europe is behind in tech because it over-regulates and it just needs to cast off these guardrails and innovate. I don't think that is at all entirely true. I think that's a very convenient story that sort of plays into stereotypes. But look, the U.S. regulates as well. everywhere. These businesses are given industrial policy incentives that may not be a bill or a regulation in the U.S., but nonetheless are sort of the government taking a stand, on the side of these businesses or in other ways to, direct what they're doing. In the U.S., I think the restrictions on models that have been floated and deployed and then revoked around Fable and Mythos are a form of regulation as well. So I think, one, we need to define what regulation is really, and then we need to get real. This is not a conversation about sort of, regulation versus innovation. What do we mean by regulation? How do we ensure that these technologies protect our core values, protect our economies, protect our ability for sovereign governments to act on behalf of their citizens? Those are the adult questions that need to be asked and answered instead of sort of high-blown rhetoric based on sort of stereotypes that break down under closer examination.
So who are the adults asking those questions? And is it a country like the UK that should take, it's a kind of, I guess, framework, if we don't want to call it regulation, to put guardrails?
Well, I think any country should be putting guardrails in service of ensuring that these technologies serve and don't undermine, like full stop. Those are what guardrails are for. I think, that a lot of people are asking these questions, but that you see a kind of admixture of hype around AI that is making it hard to come to consensus on real solid answers. And again, I think the economic imperatives and the wobbly markets around sort of, again, capex versus revenue versus profit are incentivizing a kind of looking away from some of these necessary conversations.
So this week, I feel like we had big news. Certainly, we had recent news with OpenAI hacking Hugging Face. How seriously do you take this?
Well, look, I think one of the things that was concerning to me about that, yes, there was a breach. Yes, there was, a number of issues around Hugging Face's access to defensive models. We have a whole nexus of issues there. But I think we need to back up. This wasn't OpenAI hacking Hugging Face. This was an offensive exercise in which a human being told a model created by OpenAI, a system of software and hardware and statistical models that included an OpenAI model, to exploit vulnerabilities in software. That model then went ahead and did that. It did that in some unexpected or unpredictable ways. It looks like they didn't have an air gap network, which means it was able to sort of breach into Hugging Face's production code, which was sort of the shocking element there in a lot of the headlines, and that it did what it was told to do by the human beings who were running that exercise. Now, we saw a lot of hype coming out of that. We saw a lot of hyperbole. We have seen no incident report. We have not seen a log of what the prompts that were given to that model were to, compel it to do that or to, sort of prompt it to do that. And so I think we need to really tamp down the hype and really back away from this anthropomorphic language that paints these models as somehow conscious. And every time they do something that we might not have intended, we're like, oh, are they breathing, right? These are complex software, hardware systems that humans are behind. And I think, anchoring it in that technical reality will help us have much smarter conversations that aren't, again, kind of inflected with this pre-IPO hype and hyperbole.
Should OpenAI have done something differently?
I don't have enough details to understand the answer to that question, but I would say it appears that they did a fairly shoddy job of sandboxing and of kind of containing this offensive exercises. In the security community, we'd say it's a kind of red team exercise where we want to know the vulnerabilities in our systems, and so we prod and poke at them and try to find those before somebody else finds them.
How do you look at the Chinese models?
I mean, the Chinese models are impressive. I think the U.S. versus China, we're seeing a very interesting game of market arbitrage with the Chinese models. I don't have any secret insight into whether, Kimi 3 was a distillation of an Anthropic model, but it's clear that there are two economic models at work here. There is a sort of proprietary model that is licensed through cloud infrastructures and, owned by a given company. And then there are open source models where the model itself may be free to download, but then what you're paying for is infrastructural capacity and the construction of a system that will use that model in a way that is, useful to your business. And I think, I don't have a crystal ball here. Things are moving very fast, but I think it's very interesting and to see what happened there and to watch the market's response.
I mean, I like speaking to you because actually you're quite balanced, right? Because you either have a lot of concerns about some of these models, as you say, running away and kind of being the end of humanity, or you see only the benefits. I see a lot of chief executives, but also maybe heads of state, not knowing the questions they have to ask.
Yeah.
Is this the biggest concern, like how people go around thinking about this because it's moving so fast and all at once?
I think this is a huge concern, and I actually think there's a lot of uncertainty and almost embarrassment on the part of people who are in positions of power, who over the past few years have been hit with questions around tech and are like, shoot, I don't know the answer to that, but I feel like I have to fake it, or all the men in the room seem to know about tech, so I'm just going to nod along. And I will see the same people who will tear up a balance sheet in a board meeting, just asking incisive questions. I don't understand how that accounting works. What's that group doing? Really, really confident in their ability to, ask the questions that matter for them, their business, their institution. Say nothing when they're given a presentation that is, kind of an admixture of AI hype and reality. And so I do think we need to be asking much better questions, and those questions can be dumb questions, but they should be selfish questions. How does this actually work for our citizens, our government, the future we want to create? I may not understand the linear algebra to build a large model. That's not my discipline. But hey, I run a large hospital. I understand how that works, and I need to know whether a software system built with that model integrates with our legacy infrastructure, or whether I'm signing a contract that will ultimately not serve our patient population. Those kind of questions need to be much more front and center, and I think, hopefully integrating those into the public debate will give us a much more grounded understanding of how to govern and build these technologies.
And what you said is also, at the end of the day, AI is also worry about the concentration of power, because there are so few actors.
Yeah.
And it seems that, when you look at the spending, this power is growing.
Yeah, this power is growing. So is the cash flow is shrinking. Power is growing. Look, there is a long history to this. This is not, we snapped our fingers in 2023. ChatGPT grew an entire new scientific paradigm on which a large industry was built, and only the smartest won. We saw in the 1990s the U.S. government turning over network communication, so these communication networks, the internet, to the private sector. And the incentives built by the U.S. state over a number of decades to grow that sector into monopoly communication networks. And so what we had is the growth of a surveillance business model, where social media platforms came out of that moment, spread globally with the U.S. state behind them, creating a monopoly infrastructure that is not the result of Europe or any other jurisdiction not innovating. It's the result of the fact that network effects, economies of scale, and that type of entrenchment across the stack in a vertically integrated way allotted those winnings to a handful of actors in the U.S. that AI is now built on top of. It's the social media business model with the huge amounts of data, with the giant economies of scale in compute that actually catalyzed the AI boom in the early 2010s, when it was recognized that, hey, deep learning, this thing we hadn't thought was very interesting for very long because, it didn't really work for us. It actually does new interesting things when we have huge amounts of social media data and huge amounts of compute. And in particular, it is useful for calibrating engagement-driven algorithms. So the concerns over the 2010s around, what is the algorithm feeding the young people that we continue to talk about are actually deeply linked to this AI revival. And that's the kind of view I think we have to have of the market if we're then going to turn to the conversation on guardrails, on what Europe should do, on how we govern these. And the answer is not snap your fingers, try to build an alternative hyperscaler, because we understand these are monopoly forms you can't simply replicate. It's how do we leapfrog? How do we build better, more secure tech?
And so, but like, how do you do that? Because if you're Europe, then you're also seeing, the conversations between the Department of Justice and, of course, and you kind of think, well, there could be the U.S. government calling some of these big companies and saying, stop giving your technology to Europe. And if we're too far behind in Europe to build it, how do I think about it now?
Well, I think we think about the problems we're trying to solve, right? And you can build a large model, you can build server capacity, but what are the problems that are not being solved by these large models? There are real security and privacy issues that have a market. Military, defense, really, the financial institutions need very robust systems. They can't be just sort of hand-waving at hallucinations. That's a market to serve. I think the energy expenditure and the compute required to train and to run inference on these models is another opportunity for a market. We're seeing massive pushback against data centers, largely, or in many cases, because we're seeing rising energy costs. We're seeing kind of energy depletion on the grid in the U.S. Well, there's an opportunity there to try to leapfrog in terms of efficiency. These large models themselves, these LLMs, which have sort of become the end-all, be-all to the AI conversation now, they do some things very well, good at coding tasks as long as you carefully review the code they produce. But there's a lot of things they don't do well. So can we invest in smaller or alternative approaches that don't require hyperscaler infrastructures? So there are many things that a leapfrog and sort of innovative approach could actually focus on, but you'll always be behind if you're focusing on trying to replicate a monopoly that has a many decades start.
But so you also said the Chinese models were impressive. So what would it stop? I mean, should a company actually in Europe and the U.S. look at those models, or there are even more concerns?
Oh, I think they are looking at those models. I think the concerns would track to what do you actually want to do with those models? What are you? What would you be concerned with with a data poisoning attack in one of those models? Would you be concerned with that in a U.S. model, right? So these questions need to be asked across the board and can't be filtered through a sort of geopolitical arms race, Cold War era narrative. It would be my answer. Any sober business leader needs to be asking these across the board, particularly in this environment.
Meredith, thank you so much for joining us today. That was Meredith Whittaker, the president of the Signal Foundation. Now, coming up, Bloomberg's exclusive interviews with the daughters of Africa's richest person, Aliko Dangote. We speak about their roles in family business empire, but also the upcoming plans to go public. Those interviews coming up next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the daughters of Aliko Dangote, Africa's richest person, are taking on greater responsibilities in the family business in a bid to build a conglomerate into a $100 billion industrial group within 4 years. Well, Bloomberg spoke exclusively with them in their first interviews in their new roles. Well, Fatma Dangote, who leads commercial operations for the petroleum refinery, spoke about its upcoming IPO.
Yes, it's good that there's one of the biggest IPOs about to happen within the continent. But for me is the participation of both Africans and people outside of Africa into this story that the Dangote Group is trying to sell. When you look at it, Nigeria in particular has been exporting crude oil and importing refined petroleum products. But this refinery has changed that narrative or equation, whereby we're now having to add value to our natural resource here within the continent. And we're having to now be a net exporter of jet when you look at it. When you look at the second quarter of products, jet in particular, that went into Europe, you see that 25% of that volume came from the Dangote refinery. So we're selling a story that Africa is able to industrialize at scale, not just at scale, but at a global scale. It's telling a story that Africa is able to conceive an idea, finance it, and manage a mega project at a global level. So it's not just IPO selling shares. It's showing the world that Africa has entered into the new phase of industrialization.
Fatima Dangote there now. Her sister Maria sits on the board of the family cement business, and she told Bloomberg that the unit is hoping to complete a secondary listing in London this year, saying the city is more compatible than other venues.
It will happen maybe by end of this year, the secondary listing, and we are planning to list in London because I think we compared many, like stock exchanges, London is the one very, like it's compatible with the, our business.
Really?
More easily because if we say, because Halima is running the family office in Dubai, so before we thought of the secondary listing in Dubai, but the rules, it will make it hard, for us, to list, to do the primary listing in Dubai because there are many regulatories, compliance that we have to do, and it will take us more years, and we have been talking about this listing, for almost like, I think, 6 or 5 years, more than that.
But you're confident this is the year?
Yeah, I'm confident. Because why I'm confident? Because we did all our, background checks and everything, as I'm talking now, we have our lawyers, our financiers, and every other person, and even, the team, yes, are working, day and night to see if there is anything that will stop the listing. And as I'm talking now, nothing, no any constraint for now.
Well, that was, of course, Maria Dangote. Now, Pakistan is enjoying a moment in the diplomatic sun, having emerged as a key mediator between the U.S. and Iran. Bloomberg Regionals has been looking at how Pakistan's leaders may have opened a path to more economic opportunity by cultivating ties with President Donald Trump.
The Roosevelt Hotel, with its Italian Renaissance-style facade, used to be a happening spot, a choice location when Hollywood visited New York.
But ladies and gentlemen, we're not here to indulge in fantasy.
The reality is, last year it was a migrant center. Today, it's shuttered. And yet, its owners say it's worth $1 billion, and they've called in help from this guy. Oh, and who are the owners? That would be the Pakistan government.
It is one of Pakistan's most valuable foreign assets.
In February 2026, Steve Witkoff, one of Trump's closest advisors, helped broker a deal for the U.S. government and Pakistan to jointly redevelop the hotel.
But recent deals between the Trump administration and Pakistan have extended beyond the hospitality scene.
Markets are waiting for Islamabad as delegations from Iran and the United States prepare for talks in Pakistan. The ceasefire remains fragile.
Pakistan has done something impossible. Pakistan brought the U.S. and Iran together on one table after 50 years.
This was a deliberate attempt by Pakistan to make itself a global player.
That peace hasn't lasted. The ceasefire between the US and Iran has collapsed. But Pakistan hopes its role as mediator has more longevity.
So this has really been Pakistan's shining moment.
So how did Pakistan become one of Trump's favorite diplomatic partners, and can it capitalize on it?
Well, subscribers can watch that documentary in full right now on the terminal and on Bloomberg.com. Now, Intel shattered Wall Street estimates with its revenue forecast lifted by booming levels of spending on data centers. You can see pre-market Intel gaining some 4.2%. We'll have plenty more, of course, on the markets. U.S. futures, if you look at what markets are doing, they're getting a little bit of relief. Brent slipping below $100, but still concerned about AI. Up next, Bloomberg Brief, and this is Bloomberg.